Hey, everybody, it's January 13th. Scott Riley, the market update desk, NMLS number 157524. We got through last week's job numbers. Now we fall into inflation data week. Now, one of the things we're watching in the background specifically is oil prices. WT crude oil has jumped to its highest level since October, and that now is at 78.44 a barrel. Now, this is the result of additional sanctions that the U.S. administration has implemented and put into effect for Russian oil and gas. So this is a concern because oil filters through so much of the economy, the movement of goods and services, which affects prices. That could lead to some issues with when we see inflation numbers in February and March. Now, we did definitely see last week a big BLS jobs market report. In fact, it was 102,000 above expectations, which this happens in January when there's a seasonal adjustment and we see negative revisions the post-seeding 2 months. So this is a big differential or difference between what we see in consumer sentiment. Now, the jobs report showed a strong labor market with a lot of job creations and unemployment falling from 4.2 to 4.1. The consumer survey and sentiment tells a very different story. In fact, the University of Michigan survey of consumer expectations showed us that the share of those polled that see unemployment in the year ahead of us as rising grew from 32% in November, 40% in December, and now is at 50%. We didn't see this high of a level of people that think unemployment is going to increase since April of 2020, and we all know what happened then. Correspondingly, the share expecting lower unemployment fell to a 4-month low of 16% from 23% in December. The gap between those that think unemployment is rising versus falling in the year ahead expanded, meaning the difference between what people think, a differential of 34%, which is right where it was back in December of 2007 and January of 2001. And the reason this is important is because that was just ahead of recession in both of those instances. So unemployment is a very important thing we're looking at, not just from what we're seeing from BLS media and politicians, but what the street, the people, us, are actually seeing in front of them. This is a big week again. Tuesday, we get producer price index. Wednesday, we get consumer price index, CPI, mortgage applications, the Fed beige book. Thursday, initial unemployment claims, housing market index, and a very important one in retail sales. It's going to be very important to see how December went. Friday, we get new housing starts, completions, and permits. That's important because we've seen a increase in the opinion of builders that are looking for this year to be better because of potential reduced governance and oversight in regards to getting permits. Now, what to look for this week is specifically in the producer price index, the PPI, we are expecting to see the headline actually jump significantly from 3% to 3.4%, and the core to increase from 3.4 to 3.7. Those are big, big jumps. Now, luckily, the PPI, producer price index, doesn't affect the bond market as much as the consumer price index, but it is very important to watch. Now, this doesn't mean prices have gone up incredibly or exploded. Well, they have been going up. This has to do with the replacement number. We actually had a negative number last year that we're dropping off in favor of what's coming out this year, and that's leading to this increase in the year over year. Correspondingly, consumer price index, the CPI, it's expected to come in at 0.3% month over month, which is likely going to cause the year over year to increase by 0.1 in the headline. The core, which is very important for the Fed to see, is actually looking to come in at 0.2, up month over month and flat year over year. Now, one thing we could get that would be beneficial, we don't know if we're going to get it, is any help from shelter costs. That's the item that we're going to try to hang our hat on to get any benefit. I don't think we're going to get much different than what these forecasts are. So we're watching these numbers very carefully. Be on guard with everything this week. We're going to see volatility. We talked about we're going to see probably elevated bond market and mortgage rates right through the end of January. Give us a call. We're happy to review this, go in more depth, and also help give you our expertise to help get you pre-approved, get your offers accepted. It's snow out there right now. Elevated rates means fewer buyers, means less competition. You're still going to get competition, but it's better to have fewer people competing against you than more. 616-293-2189. Have a great afternoon.